and welcome to all of our viewers. You're tuned in to BNSN Our Weekend. I'm Avandabad.
Hi, Megha Chadha, and we've got in fact a jam-packed show for you. So let's give you a glimpse of all that we'd be discussing today. First up, of course, would be your stock-specific queries. So, well, we'll take up your queries on a Karnataka Bank, a BPCL, as well as Power Major NHPC.
After those three individual queries, we will also be discussing Ashish Pishwaria's portfolio on the show.
And of course, our guests, we can't do without them. So for the fundamentals of the markets, we have Mr. G. Chokalingam, who's the Executive Director as well as Chief Investment Officer at Centrum Wealth Management. And Mitesh Thakkar, Technical Analyst at miteshthakkar.com, joins us to take us through the technicals of the market. So let's not waste any more time and go straight off to the first query for the day then. This one comes in from Gaurav Goenka, and he's got a query on Karnataka Bank.
Karnataka Bank, I have 5,000 shares bought at the rate of 99. The current price is 88. I just want to know, should I book my loss and exit or should I hold?
What should Gaurav do given that he's losing out on this investment? Well, Mr. Chokalingam, I'm going to start off with you. Given that the counter has corrected from those 100 plus levels in the month of July, Edelweiss does have a buy target on the counter with an upside of 120. You think he should hold?
Definitely you should hold on to it for a couple of reasons. One, recently the stock price had some pressure because there were a lot of apprehensions that the bank would have lent to Kingfisher Group as well as to Deccan Chronicle Holding. But we believe that this bank doesn't have any exposure to these two groups. And secondly, fundamentally it's very strong. It's trading at around 0.7 times its adjusted book value, and it has got a history of more than 5-6 decades. And there is a possibility of this bank joining the consolidation process because there has been a lot of acquisition in the old private sector banks where the valuations have been anywhere from 2 to 6 times the book value. As I said, this bank is enjoying only 0.7 times book value, so therefore he should hold on to the stock. We have a target price of almost around 126 rupees, so we can continue to hold the stock now.
Okay, so fundamentally things looking sound for a Karnataka Bank. So Gaurav, hold on for a target of 126. But if we talk technicals, then Mitesh, you know, from the last month has been pretty volatile one. It was above those 100 plus levels, and it's of course slipped sharply below that. But in the last 3 months, the count has managed to add about 16%. So what would you advise him to do?
See, I think, my sense is that if he's a slightly longer term investor, I think he should look to accumulate around the earlier lows of 75, 72. I think, that's the broad support area. My sense is that the stock is doing a range of about 75, 72 to about 105, 110. So I think, average it out around the lower end of the range and then try to exit around 105, 108. But if he's a short-term investor, I think, typically 13% cut should have already triggered his stop loss. So if he can, and if he's a investor with a slightly longer term or a medium term horizon, I think, about 5 to 6 months, I would suggest averaging it out on declines to about levels of 75, 72.
Okay, that's the word of advice coming in on the technical side. Can average out the counter. For the fundamentals, hold on with an upside of 126. Well, Gaurav Goenka has another query. This time it's in the oil marketing space on BPCL. Let's hear him out.
BPCL, I have 500 shares bought at the rate of 3. I wanted to know, should I hold or should I exit?
Okay, so 500 shares of a BPCL at 345, and he is making some bit of money on his investment. So Mitesh, from the charts, the counter is seeing some bit of resistance at 100 DMA, but it's expected that we might see some, fundamental news in terms of the petrol price hike coming through. Do you think the charts are supporting that possible up move that's being indicated?
See, I think two things. One is that BPCL has been an outperformer in the entire OMC space. It's done much better than IOC, HPCL. Even it's kind of, managed to outperform most of the other stocks in the Nifty 50 index. I think this is a good stock. It's already gone through a correction. About 335 should be a very strong support for the stock. 335 to about 330, I think, So keep a stop loss below that and hold on to the stock. There's a good chance that if he's got a slightly a horizon of about 3 to 4 weeks, I think, you would get a exit and a price target of about 385 to 390 on the upside.
385 is the upside target on the technical charts. With Mr. Chokalingam, there's so much flip-flop when it comes to this diesel and petrol price hike. But apart from that, BPCL has discovered oil and gas in its Brazilian assets, and that really adds to its recent rich haul in Mozambique, Africa. So this is going to augur well, do you believe?
Well, I mean, the discovery of oil and gas outside the country is really helping the stock, and therefore the investor can hold on to the stock. But I would suggest him to hold on only in the short term. Maybe when the price moves closer to 390, he can think of booking profit and come out. For simple reason that India doesn't have enough oil, and the cheap oil is gone. We have a very firm outlook on crude oil prices in the medium to long term, and which means there is going to be a lot more pain for this kind of companies, in the sense the government would shift the subsidy burden equally between the upstream companies as well as oil marketing companies. Particularly if you look at the data for the subsidy burden, in the last 5 years the subsidy burden for upstream companies almost more than doubled. And there is a limit to increase the subsidy burden for upstream companies like ONGC and GAIL, because you need to find more and more oil and gas in the country, so you can't tax these companies, which means the pain is going to be much higher in the future for oil marketing companies like BPCL. So therefore I would suggest offloading the stock when it improves further, anywhere 5-10% and closer to 390. You can think of shifting to stock like Hindustan Zinc, which is attractively valued at around 7 PE and sitting on a lot of cash. The cash on book is around 19,000 crore. And tactically also there is a development that the government might sell the stake to Vedanta Group at around 150. So in the short term you can get a good upside. Even in the long term there is a possibility of a sustained capital appreciation from this stock. So therefore I would suggest shifting the stock to Hindustan Zinc at appropriate time.
Both our technical and fundamental guests are suggesting that you could look at booking your profits in a BPCL at levels of 385 to 390. In fact, Mr. Chokalingam is also suggesting that you could look at investing into a Hindustan Zinc. On to the third and the last query for the day then. This one comes in from Amit Bora all the way from Hyderabad, and he's got a query on NHPC.
I bought NHPC at rupees 32 and I bought 500 shares of NHPC. I bought it when the market was at 21,000 level. I would like to know whether I should continue to stay with it, or should I sell it, or should I hold for how long?
Okay, so that's quite a hefty quantity that he is losing on his shares on NHPC. Mitesh, given that it's facing resistance at its 50 DMA, do you think it's worth holding on?
See, I think, if you look at the price history of NHPC, it's kind of on multiple occasions since the last 6 to 7 months managed to take support around the 17 odd levels mark. So I would suggest keeping a stop loss below 17. If that level holds, if that level kind of manages to hold on, you might see a rally developing over here, which might take the stock to about levels of 22, 23, which could be good levels to exit it out. But if it's 17 breaks, there's a good chance that you might see more downsides happening over here, and in that case I would not advise holding on to the stock.
Okay, so 17 is a critical level, Amit, that you should be tracking for an NHPC. But fundamentally, Mr. Chokalingam, this is a counter that's just seen a one-way move ever since its IPO in 2009. It's underperformed the power index, the Sensex as well. And the commissioning of its projects has also been a bit delayed. So fundamentally, how are things looking?
Fundamentally, I'm not quite positive on the stock for a couple of reasons. One, this is basically a idle power project. So you have a major concern in terms of sourcing the input. You can't, like in the manufacturing business, keep on adding the input and expand the capacity easily. So it depends upon the natural, element of getting adequate water to generate the electricity. So therefore there is a limit to growth. And second, it's highly leveraged. If you see the total capital employed, it's almost around 7-8 times the sales revenue. And so that also gives me a lot of discomfort. And third, the return on capital employed is in single digit. It is pathetically low at around 8%. So nor there is any impressive dividend yield. So I would suggest, either to sell the stock right away, or if he finds it very difficult to book the losses, he can just hope for any recovery in the market and therefore some bit of recovery in the stock, and sell the stock and move on to some other stock where, the dividend yield is quite high, and also there is a clear visibility of consistent earning growth. So something like Andhra Sugar I would recommend. As compared to less than 3% dividend yield for NHPC, Andhra Sugar Limited gives about close to 5% dividend yield, and also there is a clear visibility of earning growth, because the sugar business is turning around, and particularly in Andhra, the rainfall has been absolutely normal. All other cane growing areas, the rainfall has been severely impacted. And this company is also into caustic soda business, which has made almost 34 rupee EPS only from caustic soda. So this year the sugar business will add a lot more profit to the company. So he should move on, shift to this Andhra Sugar from NHPC.
NHPC certainly doesn't seem to find favor with either our technical or fundamental guests. So, Amit, you could, of course, look at exiting that investment.
Time now to take a quick break right here on Buy Now, Sell Now Weekend. But on the other side, we've got Ashish Peshwaria's portfolio that we will be discussing with Mr. Chokalingam. This is the show that gives you a heads up to the week ahead. You're tuned into Buy Now, Sell Now Weekend.
Well, time then to bring on board our portfolio query for the day, which comes in from Ashish Peshwaria, who's an airline employee.
Ashish Peshwaria is a chartered accountant employed by a global airline company. He invests in the stock markets and is a firm believer in the power of patience. Pretty much like his father, who still holds the Reliance Industries shares he purchased during the company's IPO in the 70s. So how does Ashish pick his stocks?
Be a mix of industry, I would say, valuations.
Ashish's portfolio comprises of several large cap stocks like Kotak Mahindra Bank, Larsen & Toubro, JSPL, Reliance Industries, TCS and HCL Tech, all purchased at rock bottom prices. In the mid-cap basket, he holds Bata, Glenmark Pharma and Sonata Software. It's a rock-solid portfolio, but Ashish wants more.
I like the consumption story, I really do, and that includes for me FMCG